welcome to the video. Today we shall look at certain aspects of money laundering, how people misuse trade finance, trade instruments for money laundering, and how as trade finance professionals we can help in prevention money laundering. What are the anti-money laundering aspects that we have to look in, how to prevent terrorism financing, how to counter illegal funds being moved through trade instruments. First of all, let's look at the basics. The basics are, what is money laundering? Money laundering is an attempt to conceal the origins of money. Either it is illegal by origin or used for illegal purposes. Money laundering is an attempt to disguise or confuse the audit trail as to where the funds have started coming from and who is the ultimate beneficiary of those funds. It is washing the dirty money and making it clean and appear apparently genuine earnings. It could be the money used for illegal purposes, or it could be money obtained by legal means. What are the tools and techniques used in money laundering? One of them is that the first stage is placement, where the illegal cash is brought into by means of trade or into commodity. Maybe jewelers or other small merchants will bring that money into their business. Second is layering. Multiple and complex transactions are carried out to confuse the audit trail, where this money is moved to buy and sell for so many other goods and services, so that ultimately we will not know that the cash that was brought in by placement was of illegal origin. The third is integration. The money that has been used in trade and other businesses during layering is finally brought into a financial institution as a real genuine money, either in an offshore FI for overseas direct investment or by means of overbilling brought in as a revenue earnings. Let us look at how the cash transactions help facilitate this. The cash transactions, either jewelry or real estate, is a most important vehicle used for money laundering, where prices can be manipulated. Certain jurisdictions with greater banking secrecy are used to keep this cash deposited into bank accounts, or jurisdictions where there is less rigorous monitoring for anti-money laundering activity or a financial transaction or funds movement. Those territories are used for moving the funds. It is also done that mix legal and illegal receipts and deposit in the bank, so that you will not know which portion was not genuine revenue. The cash transactions also used to effect payments for unaccounted cash, so that there will be no record of earned or spent money. How these shell companies are used. Shell companies are either a non-existent business or a non-existent transaction, or to disguise a beneficial owner. The company will be there, but once you try to reach the ultimate beneficial owner, you will not be able to reach anybody, or there will be no genuine transactions in the shell company. How the terrorist financing is happening through money laundering. The terrorist organizations may generate revenue either by illegal activity or apparent legitimate activity. So they will do some work which is legally permitted in some countries, and the money that they earned will use for terrorist purposes. That is illegal use of the money or funding illegal activity. Another organization is the terrorist organization or illegal organization is being funded by individuals or organizations. These individuals or organizations would have earned the money legally and spending it for illegal purposes, or may have got it from illegal means. This is the terrorist financing, and for this also money laundering is used. Another way of money laundering is that the FI is captured. They handle cash without much scrutiny. The financial institutions which handle cash without much scrutiny is taken into control by these money launderers, or launderers have ownership or management control over such institutions, so that without scrutiny they can move the funds. How money laundering happens? Money laundering happens in multiple ways, especially in the trade arena. Bulk cash smuggling. Physical cash is smuggled to an area where there is no controls over the cash handling and then deposited into the bank accounts there. Most important part is smurfing. Smurfing is the conspirators make small deposits of money. For example, if the threshold is $10,000, they deposit $9,900, $9,500, $9,750 into by various people into various small accounts. And these money is then collated or wire transferred into one main account, and from there it is used for whatever purposes they want. Because it has small amounts and because multiple accounts are being used, the volume of account, the frequency of debits or the frequency of transfers may not trigger any suspicious activity report, and so the financial intelligence unit FIU of that country will not be going against these criminal syndicates. Now this money that has been deposited in small installments into various accounts is used to purchase some goods, maybe some heavy equipment, which is shipped overseas, and the overseas party will, instead of remitting the money to this country, will be paying there locally. So the money has been laundered and there reached the other destination where they wanted it. Another is a fraudster lists an item either in eBay or somewhere else at an X amount, and the launderer overpays it, for which he excludes the competitors. For example, if something is worth $100 and if it is listed for $250, nobody else will bid and this guy will pay $250 and buy it. So once he pays $250, his black money or illegal money has gone, and the other party who is selling has got legal revenue for having sold this particular goods for $250. Internet, offshore banks and shell companies, these three together is a very bad combination which helps in money laundering, and because of this, money laundering has become more prevalent than ever before and more difficult for the institutions to control and coordinate this anti-money laundering activities. Small businesses are more often used or more often become prey for this. How is it? The cash handlers or the jeweler or a gallery owner or an antique owner is asked to either undervalue or overvalue his goods and then introduce the illegal money as his legal receipts and then deposit it to bank and put it to legal means. Money is deposited in a controlled foreign corporation offshore. This foreign company offshore then invests this money from a tax haven into developing countries who is in need of money, who will not be chasing for the beneficial owner of these funds, and so this will become exempt from taxation, exempt from records, exempt from revealing any information. Another option is an individual walks into a casino and then he cancels whatever he has invested to buy the chips, and this cancellation money he treats it as a gambling earnings, so it becomes a legal revenue for him. Payment of unaccounted employees using this illegal cash is another method of doing away with this cash, or purchasing real estate with illegal proceeds, or arts and other things which cannot be normally valued at the fair value and then selling it, reselling it at manipulated prices. These are the ways in which the launderers use the normal transaction to launder the black money into white or to facilitate conversion of illegally earned proceeds into legal means. What is FATF? The Financial Action Task Force, created in 1989, had given certain guidelines as to how the bank should handle this. One of the recommendations are given in 2012, and they have certain definitions for high-risk countries and territories, non-cooperative countries, and they are looking at the countries who don't have enough legislation to prevent ML, money laundering. So if the legislation or regulation there is not robust enough, they are called either high risk or non-cooperative, and banks are asked to put in extra efforts in monitoring those transactions. FATF says it's offense to assist handling of suspicious funds. If a banker is assisting handling of suspicious funds, it's an offense. As a documentary credit specialist, as a trade finance professional, if trade is used to handle suspicious funds, it's an offense if you are assisting the transaction. How you assist? Either the proceeds of crime is used in the transaction, or the transaction is intended to help terrorism, then you are committing an offense if you know about it. What, as a professional, you are supposed to do as a banker? As a banker, failure to report is a crime, tipping off is a crime. And failure in our obligations to check and ensure our policy and procedures are followed, that's also a crime. What others are the crime? Failure to keep comprehensive and complete records. You have to keep records for 7 years, and if there's a suspicion transaction, report activity 5. Disclosing suspicion or investigation of the results is also an offense. And the non-filing of suspicion report is also an offense. So these are the things which the Financial Action Task Force requires the bankers to do. What are the recommendations? The recommendations are that know your customer has to be done. CDD, customer due diligence has to be done. Know your business, know your customer's business, know your customer's customer. KYCC, KYC, KYCB and CDD has to be diligently followed. The identities of the parties of the transaction has to be kept on record, and it should be satisfactory. The beneficial owner of the business, in case it is a shell company or foreign owned institution, understanding the business is to be done and understanding the underlying relationships. These are the things which a banker is supposed to know. Once we go into details into trade, we will also look at how from each and every transaction we will try to see how this money laundering can be prevented. For example, non-existent goods, non-existent documents, overpricing and underpricing, over-invoicing and under-invoicing are some of the ways in which the trade is used for money laundering by the various parties. Thanks for watching the video. We shall meet again another session on another video.